According to an NSW parliamentary research paper released in July 2025, somewhere between 15,000 and 43,000 homes in New South Wales are sitting long-term vacant right now, not between tenants, not being renovated, just empty. And this is happening while Sydney renters are paying a median of $817 a week, the highest of any city in the country, while families are doubling up in single bedrooms, while the 2026 annual street count confirmed that 296 people were sleeping rough in inner-city Sydney on any given night. So the question a lot of people are asking right now is simple. How do you have a city where homes sit empty and people can't find somewhere to live at the same time? That's exactly what we're breaking down today.
Let's start with where things actually stand in Sydney right now. As of early 2026, the median house price in Sydney is approximately $1.617 million. Units average around $871,000. Sydney's median dwelling price is roughly 13.8 times the median household income, making it, according to Courtality's data, the second most unaffordable housing market on the entire planet. The only city ahead of it is Hong Kong. Rents have been rising too. Sydney rents climbed 5.9% in the past year alone, and the rental vacancy rate, which measures how many properties are sitting empty and available to rent, sits at just 1.1%, according to SQM Research's April 2026 data. Below 2% is already considered a landlord's market. Below 1.5% means renters are competing hard for almost everything. 1.1% is tight. And yet, low-income renters in NSW are spending an average of 35% of their income on housing, more than any other state. Anything above 30% is considered housing stress. For someone on a regular wage in Western Sydney right now, 35% going straight to rent before you buy groceries is the reality. So we have record unaffordability for buyers, we have record rental stress for tenants, we have people sleeping rough in inner-city suburbs, and somehow, at the exact same time, tens of thousands of properties across NSW are sitting empty. Here is why that's happening, and it's not one reason, it's actually several things operating at once.
The first part of the story is about apartments that technically exist on paper but haven't been built yet. In February 2026, the Property Council of Australia went public with a striking finding. Data from Urbis's 2025 Apartment Essentials research shows that 75% of apartments approved in metropolitan Sydney since 2020 have not progressed to construction. 3 out of 4 approved apartments. They have planning approval, they have developer backing, and they are not being built. The NSW Executive Director of the Property Council, Anita Hugo, was direct about it. Years of cost escalation have increased commercial risk and slowed the commencement of approved projects. And KPMG economist Terry Rounsley broke down why in detail. His analysis found that as of mid-2024, Sydney's number of approved but not yet commenced dwellings had increased by 17.7% compared to the year before. 82% of those stalled dwellings were townhouses and apartments, the exact type of high-density housing Sydney desperately needs. What's stopping builders from starting? The numbers don't work. Construction costs have risen roughly 40 to 50% since pre-COVID. A developer who got approval 3 years ago based on certain cost projections is now looking at a project that costs 40% more to build, but where the selling price hasn't moved nearly as fast. So the rational move, from a pure business standpoint, is to sit on the approval and wait. On top of that, the number of construction companies in NSW entering insolvency tripled between 2022 and 2024. Builders are collapsing mid-project. And with Sydney costs still forecast to rise another 4% in 2026, according to Ryder Levitt Bucknell's construction market report, that pressure isn't going away soon. The Grattan Institute summed it up well in October 2025. Sydney needs around 27,000 new homes annually just to keep pace with demand. It's building roughly 12,300 apartments a year. That gap compounds every single year. If you're watching this and finding it useful, hit subscribe right now. We break down housing market data like this every week. No hype, no guesswork, just the numbers and what they actually mean for you. A lot of people watching this are either renting, trying to buy, or figuring out their next move in this market. That's exactly who this channel is for. Subscribe, hit the bell, and you won't miss the next one. All right, back to it.
Now, here's a part that doesn't get talked about enough. The City of Sydney's own council data, confirmed by the ABS using electricity usage records in August 2023, found 3,568 dwellings not in use across the Sydney local government area alone. That's 3.1% of the entire suburb. And a chunk of those empty properties are public housing. The council itself flagged it. Public housing dwellings in Sydney are sitting vacant because basic maintenance hasn't been done or because tenants are moved out years before a planned redevelopment actually begins. At one public housing complex at 82 Wentworth Park Road, apartments were sitting empty for extended periods, including units that had just received new carpets and fresh paint, freshly renovated. Nobody in them. The social housing stock in NSW has also been quietly shrinking over time. According to the City of Sydney's 2022 housing audit, there were 158 fewer social housing dwellings in the local area than there were a decade before. Social housing as a share of all occupied dwellings in Australia fell from over 6% in 1996 to barely 4% by 2021. The government has been trying to catch up. The NSW government's 2024-25 budget committed $5.1 billion to build 8,400 new social homes, with 6,200 being new builds. But researchers at UNSW have noted that numbers at that scale will still fall well short of actual need, particularly as the waitlist for social housing in NSW runs into the tens of thousands of applicants.
The third layer of this story is about what happens to apartments that are occupied, just not by long-term tenants. A University of Sydney research team published findings through a hurry in late 2024 that made the situation very clear. In some parts of coastal NSW, there are more than 25 short-stay rental listings for every single available long-term rental vacancy. Properties that could house a family or a nurse or a teacher are instead sitting available on Airbnb for weekend getaways. The City of Sydney Council noted in its own review that rents in suburbs like Zetland rose 27%, Chippendale rose 29.5%, and Glebe rose 20% in a single year, and that short-term rentals pulling units out of the permanent rental pool were part of the reason. NSW has capped short-term rental days at 180 per year for non-hosted properties in most areas, and the federal government just announced in the May 2026 budget that negative gearing will only apply to newly built homes from July 2027. That change is expected to slow investor demand for established housing. CBA senior economist Trent Saunders said the reforms should lower house prices by around 3% compared with previous forecasts. Investors are already shifting strategies. Whether that means more units flowing back into the long-term rental market or investors simply exiting the market entirely is something that plays out over the next 12 to 18 months.
So where does this leave Sydney right now? CBRE's March 2026 apartment report is blunt. Sydney needs to build 27,000 new homes annually. It's building 12,300. That's a shortfall of nearly 15,000 homes every single year, and that gap compounds. CBRE is forecasting apartment rents across Australian capitals to rise another 27% by 2030. ANZ research is forecasting a modest 0.7% fall in Sydney house prices through 2026 as higher interest rates continue to squeeze buyers. The RBA cash rate currently sits at 4.10%, and most economists expect further pressure in the back half of 2026. For renters, conditions are still tough. National rents are up 7.3% year-on-year, according to SQM research.
The vacancy rate just ticked up fractionally from 1.0 to 1.2% nationally in April 2026, the first small improvement in 12 months. But SQM's Christopher says even with that, 2026 will still see rent growth of 2 to 4%. The NSW government has passed reforms to speed up planning approvals, rezoned land near transport hubs for denser housing, and by September 2025 had given state significant development status to 261 projects, covering 91,100 new dwellings. Progress, but the gap between approval and a completed apartment with a key in the door is still wide. The NSW parliamentary paper from July 2025 puts it plainly. Vacant housing data is patchy, enforcement of any vacancy tax would be difficult, and the real problem is that multiple forces are working at once: stalled construction, a shrinking public housing stock, investors weighing short-term versus long-term returns, and a planning pipeline that still runs slow. Everyone, renters, buyers, and investors, is watching what the next 12 months bring, because the data says the pressure isn't going away on its own. That's the full picture of where Sydney's housing market stands right now, and why the question of empty apartments and impossible rents in the same city isn't a paradox. It's the result of a lot of things breaking down at the same time. If you found this useful, subscribe and hit the bell. We cover housing market data every week. And drop a comment below. Are you renting, buying, or sitting this one out? Let us know where you're at.